I know you've all taken a financial accounting course before, so there's no need to go too in-depth on the topic of accounting. But since the information from accounting statements are going to be front and center of much of what we covered in this course, it's important that we're all on the same page. So we're going to do a brief review of accounting. First, some motivation. Why are accounting statements even important? Well, for the most part, they're the public's only chance to see what's going on within the company. We are outsiders, and the financial statements are our window into the company. The statements let us know what the company is up to, how they're performing, and what kind of things we can expect from them in the future. Without financial statements, we'd be in the dark on these issues. Accounting is simply the language of business. It's a system of organizing very complicated information in such a way that people outside the business can understand them. In finance, we're going to take that information, process it, and try to use it to make decisions. The annual report, sometimes called the 10-K, is a document that the SEC requires corporations to file. This annual report discloses to shareholders and the public the ins and outs of the business. It's usually structured like this. It begins with a narrative in which the CEO describes what the business is, some of the risks they're exposed to, and unique events like legal or regulatory issues. Then there's a management discussion section where management tries to bring some context to the raw data that's to come. There they'll try to explain why their revenues declined or why the profit has increased and things like that. Finally, they'll end with the financial statements. The balance sheet, income statement, statement of cash flows, and statement of stockholders' equity. You can follow the links included here to skim through Tesla's annual report. In it, you can get a taste of what kind of things they disclose and the level of detail they get into. In this course, we're going to focus specifically on the financial statements. And the SEC makes it easy for us to collect and work with the data through their EDGAR system. Again, I encourage you to follow the links here and explore how it's all laid out. Having the numbers in front of us is the first step, but it's probably more important to understand what it is we're looking at. If you see something changing over time, it's crucial to understand why it's changing. For example, Tesla's revenue plummeted in 2019. Is this a one-time occurrence, or is it something we should expect in the future? Understanding the why is often more important than the what. A thorough understanding of the financial statements can help us identify things that don't quite look right. An example is Enron. There are a lot of things going on with Enron, but there's one key thing that can be identified to show that something strange was occurring. From accounting, you probably remember that revenue is recognized when it's earned, not when cash is received. Operating cash flow, on the other hand, is recording the actual inflows of cash. So looking at this chart here, we can see a disconnect. Enron is reporting a lot of revenue, but a lot of that revenue is never actually turning into cash. That should have been a warning sign. And then shortly after, we see the demise of Enron. So this is a case where being able to analyze, interpret, and understand financial statements could have really come in handy. In the next video, we're going to go a little more in depth into each of the individual accounting statements so that we were ready to tackle the analysis aspect of finance.